Hi everyone. In this video we're going to take a look at the workbook exercises for chapter 4. And in this first video we're going to briefly look at AP 3B. I'll do a couple of the problems there just to kind of get you started. That one doesn't really, there's not too much involvement with that, so I'll just do a few and then leave you to do the rest. And then we'll work on AP 4B. And that one is more detailed, and I'll do a full walkthrough there. So to begin AP 3B, we want to look at these accounts here, cash, accounts receivable, etc., and figure out if the normal balance is a debit or credit, and then if a debit or credit will decrease. So a couple things to keep in mind. Normal balance really speaks to the balance that an account would typically have, which is also the balance that would increase the account. And so essentially you're going to have the opposite on the decrease side each time. So you could replace normal balance with increase and you'd essentially get the same answer. So just something to kind of know what that term normal balance means is sort of maybe why it's used here instead of increase. But basically can be interchangeable. So when we look at cash, we are going to have a debit normal balance or a debit increase, like I mentioned. Basically, you can use those interchangeably. And then on the opposite side, a credit decrease. Same thing with accounts receivable. Same thing with all assets. Normal balance of debit or increase of debit and a credit to decrease. And then for accounts payable, we're going to have a normal credit balance, and it will accounts payable will decrease with a debit. So I will, I'll let you use the reference materials and the text and the other sources to go through and fill the rest of these out. It's not really too involved, but I thought this was a good problem just to have to get you to kind of practice your memorization to some extent and just knowing where normal balance is and understanding debits and credits for both those accounts. So with that said, let's take a look at the more involved problem here of AP 4B. And in this problem, we have a number of different transactions, and we're going to be asked to create journal entries for all of these transactions. So starting out, we're talking about the month of July 2018 here in our text. So let's go ahead and put our first date in. And then let's look at the transactions here. So July 3rd, we have a transaction that indicates that we provided services and received cash. So right off the bat, I always like to start with cash. It's a little slow. And one thing that's kind of funny on these problems that it doesn't really serve as well as having the Excel or doing it on paper is that unless I'm unfamiliar with how to do the formatting in the text online resources here, the debit account that we're looking at should really be formatted all the way to the left here, and then the credit account, which we'll input here as service revenue because we earn that revenue, should really be just indented over. So it's going to look a little funny there, but it is what it is. So formatting, not the best, but really the important thing is that we have the accounts correctly there. So cash is going up and revenue is going up because we provided services and received cash. And we'll put an explanation in here, completed work for client. Whoop, and I forgot to put my July 3rd there. Okay, let's say July 4th, borrowed $2,500 from the bank. So again, we're getting cash in, and we're going to take on a debt for that loan. So we'll have notes payable as our credit account, and that was $2,500. So cash goes up and our liability goes up also. And we'll put a comment in here, received a bank loan. Okay, let's look at the next one, July 6th. All right, in this one, we provided services on account. So a little different, similar to our first problem here, but a little bit different in that in this transaction, we're not going to debit cash, not going to debit the cash asset, but instead we're going to debit the accounts receivable asset account, because it was on account, indicating that we provided the services, we earned the revenue, so that'll be our credit, is increasing revenue, but we have not yet been paid by the client. And so we will book it in as a accounts receivable, or an amount to be received in the future. Put in a little explanation there. And let's continue on. And bear with me, it's a little bit slow on my side, so I apologize for the lagginess if you notice that. Let's see, July 10th. We received a bill for $240 for utilities. That'll be paid later. So again, very important. Is it going to be paid now or later? This one's going to be paid later. So the first thing we want to record as our debit is our utilities expense. So we're recording the expense in July for $240. But since we're going to pay this balance later, we need to not credit cash to reduce it, but instead we're going to record an increase in a liability, so an amount we owe of $240 to indicate that we have this amount that is outstanding that we owe. And we'll say received utilities bill. Okay, let's see our next transaction here on July 11th. We paid $690 cash to reduce the balance of accounts payable. So now, kind of, again, interacting with the accounts payable account. But this time, we're actually making the actual payment. The cash is going out the door now to reduce our liabilities for these different, whatever this relates to. And so we're going to credit our cash asset to reduce it, and debit our accounts payable asset to reduce the liability. We'll say made payment to suppliers. Okay, collected $1,900 cash from customers owing on account. So now we're going to be dealing with accounts receivable. In this instance, we're getting the cash. Like earlier, in this transaction, for example, we earned revenue, but we booked an accounts receivable because we're going to receive that in the future. And now in this second transaction, we're actually recording the fact that we did now receive some cash. And in this instance, on July 15th, they noted it was $1,900. So we credit accounts receivable to reduce it. So whatever that $1,900 related to that was going to be received has now, we'll say, collected cash on account. It has now been received, and their account receivable has been reduced. Okay, July 20th, then we've got paid $2,600 towards the bank loan principal. So just like we reduced accounts payable with the debit, a liability reduction with the debit, we can debit our notes payable, different kind of liability, but same mechanics as far as reductions and increases, and a debit being a reduction to a liability. And then we have cash being paid, so we want to credit our cash to record the payment, and we'll say repaid portion of bank loan. Okay, July 21st, we got paid the amount owing from July 10th. So July 10th was the $240. So we've got it right here. So this was kind of step one of this two-part transaction. And now we originally, booked the payable to be kind of a placeholder until we actually made the payment. So we increased our liability, and now we're paying the $240, and so we're going to decrease our liability there with the debit. And that was paid amount owed from July 10th. We'll just input that for an explanation. Okay, July 27th, we paid salaries of $1,700 with cash. So we're going to say salaries expense, $1,700, cash as a credit, $1,700, and we're going to say paid salaries for them. And then last transaction here, the 31st, purchase equipment worth $3,100. Again, very important, which will be paid later. So note that we're going to have a liability then in that regard. And we purchase the equipment, so our asset goes up. And then we're going to record an accounts payable liability. And we can say purchased equipment on account. And then again, similar to kind of like, for example, this secondary transaction, you know, if we assume in August that we actually make the payment in full, then whenever that payment happens, if it does, you know, for example, if it gets made in full, the whole $3,100 paid at once, we would then debit accounts payable to get it to go to zero, credit cash, and in essence, close out the whole transaction cycle for that that payable. I think that brings us to the end of the journal entries. So hopefully that was helpful. We've got, you know, dates. Make sure you got your accounts, your debits and credits. A little explanation there. And again, this is not good proper formatting for journal entries. Your debits should be all the way to the left, and then the credits should be just indented a little bit from the left. But in our, unless I'm missing something in terms of formatting and working in these online resources, it's the only way to really get it input. So if you're doing this, you know, on paper, just a heads up for how. And then and one other note too, the explanation should be over to the right. Italicized is kind of technically the right formatting. So but as long, you know, on a test or anything, my main concern is not with the formatting, but with the fact that you know how the accounting works, the debits and credits, the accounts to use, so on and so forth. So as long as you got that all in right, that will get you, you know, full points on a test or an exam, etc. So anyway, with that said, that wraps up this problem, primarily looking at AP4B with just a little discussion about AP3B, and we'll see you in the next one. Thanks, everyone.